Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
All right, let's get to Dana Dioria. It's so sweet to have her actually here on site with us. We're often talking to her remotely. Dana is Co-Chief Investment Officer at Envestnet. They provide technology and services to the wealth and asset management. They've got more than $5.8 trillion in platform assets, more than 108,000 advisors, 16 of the 20 largest U.S. banks, 48 of the 50 largest wealth management and brokerage firms, more than 500 of the largest RIAs, thousands of companies as clients. She's all in, and I got to say their platform sees a lot, Tim.
Dana Dioria, good to see you. Welcome.
Welcome to you. Thank you for being...
Usually we see you on a little screen on in our studio.
In the box.
So it's good to see you here in person. What's the tone that you're taking away here in this first day at Schwab Impact?
Well, I think and it's awesome to have you here with in our ecosystem, so to speak, right? The retail advisor. Yeah, look, it's all energy, right? It's a lot of excitement. You know, I've always said, and I often say, that asset management and tech are sort of blurring the lines a lot. And as tech gets better and better at bringing solutions to the advisory base, and we're just seeing that in these type of conferences, and impact is, just huge in our space.
Tell us about flows and stuff. And I also think if you've seen anything different or what you're hearing from your client base post-elections, right? One element of what is it going to be, how's it going to play out is off the table. And then there's a new set in terms of the policies to come.
Yeah, for sure. I mean, of course, there was the Trump trade. And, if you happen to get, I won't say happen, if you made that bet and, pharma and fossil fuels and financials, and we're going to have lower regulation and everything. I mean, certainly you made a buck, right? If you went for that trade.
Crypto.
Boom, right?
Wait, when you say pharma, do you mean shorting pharma, or do you mean
just lower regulations, right? The whole idea
if
around
RFK's in charge, he might get a little angry with pharma.
You're right. I mean, there's new
truly, and we saw pharma
point.
companies fall when his name
Moderna,
was floated or when his name was announced.
And there's new and every day, right? New information, especially now that we're getting all the cabinet picks. I think, I draw the line between what was happening prior to the election and what people were kind of obviously taking that bet. And, the market price can only reflect probabilities plus, the outcome and it's one number to reflect all of that. So, yeah, probably if you made these bets ahead of time, you made that buck. Now where you stand is how well is the market pricing in exactly that kind of information that you're talking about, not just do I think that, this administration will be good for pharma? Do I think this administration will be good for fossil fuels? But how well is the market pricing in that likelihood? And can I, hang on for the ride?
It's so interesting. Tim brought this up. Our Matt Miller and
Norma Linda
were anchoring just before us and just saying how NVIDIA is the most important thing, even more than what the Fed's going to do next. Having said that, what the Fed does next is important. And I think what we think today may not be exactly what we're going to be thinking a week before the Fed meeting. Yeah. So how are you thinking about Fed policy right now?
I'll tell you, I have erred on the side of they're going to need to be cautious about these rate cuts. In fact, I didn't really expect that 50 basis point, right? And, I think it was pre-election and they decided to do it. I think they thought they were behind in July. But when you see inflation kind of sticking, and you understand that, tariffs could potentially be inflationary, we may be looking at an administration that wants to run the economy a bit hot. They're looking at fiscal policy and, monetary policy that maybe has to counteract some of that.
Right.
So when you put that together, I just don't think we can expect the big tailwind from interest rate cuts in the coming year.
Interesting.
Wait, so nothing December?
I think December is definitely on the table, and the base case is yes. But I also don't think it's out of the realm of possibility that they don't do it in December, depending on the data that comes out between now and then.
So does that mean a higher terminal rate? Does that mean that the new sort of normal stance of monetary policy is high forever?
I think higher for longer. And we're back to this terminology, right?
Think about the round trip we did a year ago, Carol.
I
where
know.
we were sitting here after Jay Powell gives a press conference, let's say 11 months ago. Basically we'll see, 6-7 rate cuts in 2024. That obviously did not happen. Now the question is, okay, well, is the terminal rate something higher than we thought it would be?
I think the market has overshot the expectation of rate cuts. You just said it, right? Just going back to what we saw, of course, where did we begin this year, right? With this huge expectation of rate cuts, and that never made any sense depending on what the economy was doing anyway. I think we've overshot. I think the end point, it depends on where you call this end point. Yes, I think it could be a little bit higher than what is anticipated, but I also think the slowness of the cuts and the market, pricing that in, and there's a little bit of a case here to just stop the rate cuts altogether for now.
It's amazing. You guys shared, your team shared some notes from you and said, knowing what a candidate favors also doesn't do much for figuring out what will prevail over the course of the presidency from a stock return perspective. For example, coal stocks have excelled under Biden, while clean energy shares outperformed under Trump. And you say that's our data, Bloomberg data.
Yeah.
So it's right. Like it's just, it just reminds us there's so much that we know that we don't know.
It's numerator and denominator, right? It's what's going to be good for the revenue of these companies, but also how much the market has discounted that capability. And if there's too much of a discount, then it can't meet that. And that goes right into NVIDIA. Is it price to perfection, or is it, way past the price of perfection?
So talk to us about NVIDIA. It's our focus right now, and understandably, in about 13 minutes, we're going to be breaking down those results. We were saying that options trading right now signals that the results will be the most significant, important catalyst left this year. How are you thinking about it, what you might be ultimately hearing from clients and investors later? I don't know. Tie it up for us.
The way that we think about it is when we look at portfolios, and just we look at the research too around just what it's done to portfolios, the intense concentration in these indexes, these big names like NVIDIA, and so much of investor portfolios are actually sitting on these outcomes. And I don't think a lot of investors understand that, right? So if you say, okay, NVIDIA beat expectations and it does phenomenally well, that's fantastic. Even if NVIDIA's, I think we all know, NVIDIA's got a very good product that is going to drive for a long period of time.
People are still buying.
Growth. Yeah, right. So what happens in this moment is not super important for the course of what happens with AI over the course of the year, but we are living in a period of concentration where it is super important for our client portfolios.
People want to know, right? They care. They care. There are just certain things that are like guiding lights. Dana, so great to catch up with you again.
Thank you for having me.
Yeah, thank you. Dana D'Auria, Co-Chief Investment Officer at Envestnet, joining us right here at Schwab Impact. We're going to talk a little bit about ETFs right now. A near record 96% of ETFs have posted positive returns over the past year. The majority of products headed for double-digit wins. Our Bloomberg Intelligence team did some analysis, and this is what they found out. And, Tim, the average U.S. domiciled ETF up 14% over the past 12 months. Everybody's all in.
Yeah, they are. It's like the normal thing, are ETFs now. I mean, get this. Schwab started in the ETF business 15 years ago. It's one of the dominant players. They got 31 ETFs, including 10 fixed income offerings, making it the fifth largest provider of ETFs. With more, let's bring in David Botset, Managing Director, Head of Innovation and Stewardship at Schwab, here on site in San Francisco.
Hello.
Good to see you.
Good to see you. It's been since last year since we talked at Impact in Philadelphia.
Nothing's gone on in the past year.
Nothing at all.
Well, it's funny. You think about innovation in the space, and we've seen some big innovations this year when it comes to crypto ETFs, specifically Bitcoin and Ether ETFs. How do you think about innovation when it comes to ETFs?
The first thing we start with is what are the investor needs? That's at the heart and the ethos of everything we've been doing in ETFs for the past 15 years, you mentioned, and that's really helped compel us to up to $400 billion in assets in our ETFs. So we've been doing an annual ETF investor study now for over a decade. That's asking questions of both ETF investors and non-ETF investors about their various views on how do they think about ETFs, what's most important to them about what they're investing in, and what categories they may invest in the future. That provides us a lot of great insights to help drive our innovation in the space.
All right, so for non-ETF investors versus ETF investors, what they want, is it different?
There are some nuances to that. So in some cases, it's very much the same. It's things that they're looking at when they're selecting an ETF, like cost.
Yeah.
Right? That stands out in both categories. But there are other areas where we see non-ETF investors, they need more education. They need more insights because their confidence level in selecting an ETF is much less than those that are ETF investors.
Makes sense.
It does.
Hey, listen, one thing that they need is a mortgage-backed security ETF, which just you guys launched this week, one day ago, yesterday?
Yes, it was.
So tell us about that.
When we listen to our investor base, the one thing that they tell us is we need more precise tools for our fixed income allocation. We go back a decade and everybody was using the aggregate index to get their fixed income exposure. But in a dynamic interest rate environment like we're in today, they want to control for sector exposure. They want to control for duration. They want to control for the credit quality in their portfolio. Mortgage-backed securities is one of those that frequently are utilized in a portfolio, but they think about how do I redynamicize that aggregate exposure. They want that precision in an MBS ETF.
Are you thinking about getting into what our own Eric Balchunas over at Bloomberg Intelligence calls the hot sauce ETFs?
What's the hot sauce?
If you got 95% of your portfolio, in large cap stocks and maybe some bond funds, you got 5% to play with. Maybe you throw some into ARK or you throw some into Bitcoin ETF. Are you guys thinking about getting into that sort of specialty category? Maybe go leveraged NVIDIA ETF?
Our bread and butter largely is in the core.
He sounds like an ETF analyst. I'm impressed.
I listen to Eric Balchunas.
He does. Eric's a great guy.
He is a great guy.
Love to work with him. But, our bread and butter is really in the core products and solutions, right? Because where we see the benefit that we can provide as an ETF provider is on cost, which is number one in our survey year and year again.
Cost.
The number one thing people look at.
So there's a race to the bottom with those sort of big, broad ETFs because there is so much competition. And that's why I think you see a lot of innovation happening in how can we make our product unique?
Yes.
And also charge 50 basis points instead of 8 basis points.
Yes. Well, I think you'll see us innovating in that space is less on those hot sauce areas, and it's more thinking about how do we use the ETF wrapper in other ways. Bring actively managed strategies. Earlier this year, we launched the Schwab Ultra Short Income ETF. You look at that ultra short space, it's really hard to index that category.
Right.
We also think it's an area where an active manager can potentially provide alpha.
Is it all about active going forward?
I don't think it's all
Actively
about
managed?
active,
Yeah.
but increasingly you're seeing that in that space. That's either coming through new launches or conversions of active mutual funds into ETFs, and they're taking an outsized portion of the flows this year.
I always think about this, David. I began kind of my career in business news.
You had an ETF show, right? Or a mutual fund show.
It was a mutual fund show not so long ago, and it's just interesting to see the arc. And how we moved to ETF. When is it that we just don't have mutual funds and it's all about ETFs? Is it just a matter of time?
I don't think so.
Why?
I think there's
Why? Why do we need both?
It's all about the benefits the ETF provides. It can provide a cost benefit. It can provide a tax benefit because they tend to be more tax efficient, and a trading benefit. But in many accounts where it's a qualified account, you're not paying taxes. That tax benefit isn't there. You also see a lot of strategic allocations.
So longer term
investors, 401k plans, retirement plans, where you may not necessarily need that tax benefit or the ability to trade every day in your allocation if I'm more of a strategic investor.
Are investors, though, who are planning for their retirement missing alpha, though, by doing mutual funds that way? Are they missing out on opportunities potentially?
I think potentially, and increasingly, they may miss out on those opportunities because the innovation is going to be more in the ETFs than it is in mutual funds. So in those new opportunities that arise.
What about money market ETFs versus money market mutual funds?
It's interesting. We're seeing some work by other firms in that space. It'll be interesting to see how.
But right now, if I
evolves.
want to buy a money market fund at Charles Schwab, I have to buy a mutual fund.
It is in a fund structure. That's right.
Why is that?
Well, I think the people like the dollar NAV. Right? That's one of the big distinctions we've seen with the one product that is in the market today. You're no longer trading at $1 like you do with a money market fund. It's dollar in, dollar out. You like that known factor. And I'm not sure that investors will necessarily want to stray for that when they think about their cash investments.
How does the macro play into the ETFs that you guys are thinking about in terms of launches?
For us, it's really about the long-term view. It's less about a macro current point in time. It's really thinking about how do we serve investors' needs for the long haul?
So even a new administration, new policies that might impact the economy and various sectors, it's not the way you play it.
It's not the way we play it. That's right.
All right. Interesting. Does the macro view, though, as you look at what's going on in the space, how does it impact at all your thinking?
Yeah, so I think where it impacts our thinking is when we talk to investors about how to allocate their portfolios.
Okay.
Right? You think about our...
Do they have lots of questions right now?
Absolutely.
Let's say you were to just think about the universe of ETFs in your world. How much of those ETFs are, when the money comes in, is it about indexing versus about something outside of indexing to try to get alpha?
I think it's the way that indexing is used. right? Model portfolio strategic allocations. It's more about how do I tilt between large cap and small cap, domestic, international, looking for those alpha opportunities rather than within the asset class itself.
We mentioned you guys, 15 years, just celebrated your anniversary from your first ETF. How do you think about the trajectory and kind of where the ETF market was at the beginning? I remember a time I felt like every guest or every other guest was somebody offering up a new ETF. I feel like it's found a different groove now and it's matured, but tell us about it. You've been in it.
Yeah, I've been in the ETF industry for nearly 20 years, so it's been a long time. It's been a great run, but we've still got a lot of innovation to go. So I think we're just in the early innings still of what the ETF can bring to investors.
NVIDIA ETF, is it coming anytime soon?
They have, I think, Direction.
Yes.
Is it Direction?
There are some single stock levered ETFs in the marketplace.
That's what I was
today.
thinking of when I was referring to that leveraged NVIDIA ETF.
You were channeling your inner Eric.
He was indeed. David, thank you so much. Fun to check in with you again.
Thanks so much.
I hope Eric is listening and knows that I'm giving him all this love.
He better. I'll point it out to him.
Come on, Eric.